copper is showing itself to be one of those commodities that for the next 10 to 20 years is definitely going to be in demand.
Are the half-year results a turning point for BHP, given the performance of its copper assets?
Hi Kirsten, and thanks very much for having me. Is it a turning point for BHP? I mean, clearly the market thinks so. I think right now BHP's done a very good job of, providing the market with a view looking out over the next 10 years to the middle of next decade. And, today, copper for the first time, I think in my memory, is actually contributing more than half of the EBITDA. So, definitely a turning point. And I think from BHP's perspective, long may it live.
BHP is the biggest copper producer right now, but does the rising copper price mean this sector is ripe for consolidation?
Consolidation, I think we've already seen 2 attempts. Obviously in the last, 2 years, BHP had 3 bites at the cherry to try and have a look at Anglo American, and just recently in the last 4 weeks we've seen obviously discussions between Rio Tinto and Glencore, get out of the blocks and then stumble before they really started. So I think definitely, copper is showing itself to be one of those commodities that for the next 10 to 20 years is definitely going to be in demand from energy transition. It's a scarce commodity, it's hard to find, it's expensive to mine, and definitely it's the one commodity that not just the equity market but the corporates are chasing as well.
BHP did surprise shareholders with the announcement of the biggest silver streaming deal ever. What is your view on how the company is using its assets to capitalise on soaring prices for precious metals?
Yeah, look, I'll be the first to admit that was not the deal that I saw coming from BHP. Streaming deals tend to be the domain of companies who can't find funding from traditional sources. So, clearly, $4.3 billion up front. It's roughly half of what we value Antamina at. I know the company has said the consensus was roughly in line with what they got just for the silver stream, but from our perspective it was about half what we value the asset at. But nevertheless, very positive. It's a commodity that people don't even talk about when they talk about BHP. And so I think, you can see by the reaction in the marketplace today that it was a very big surprise to the investors today. So very atypical and good to see BHP, I think, thinking outside the box.
Well, iron ore is still a major part of the company's portfolio, but what were you able to read into the company's commentary on its ongoing commercial dispute with the China Mineral Resources Group?
Yeah, look, we've been saying, and I've been saying here at Barrenjoey for a long time now, that the best years of iron ore are behind us, right? For 20 years it's been a seller's market. Iron ore demand's been growing. Really, it's all been China driven and supply's been struggling to keep up. But now for the first time in 20 odd years, demand is probably flatlining and supply is growing, predominantly China led through their investment into Guinea. So, it's only natural that you see negotiations get a bit tougher. It's moving from a seller's market to a buyer's market. I'm sure you, me and your listeners have been involved in buying large quantities of something, and you look for a better deal when you're a dominant buyer. So, they're commercial negotiations. That's what CEO Mike Henry said. And at the end of the day, we'll get a commercial outcome, but, it's got tougher.
The federal government and Treasury will have been paying close attention to this result, given the key role iron ore has played in the Australian economy. What are the key takeaways for public finances?
Well, I think we have to look and say, okay, iron ore prices now seem to be trading around $100. The last 3 to 4 years it's been 120. So, we've lost $20 a tonne, so that's a negative for government take, but then volume is still growing. BHP is looking to grow from 290 to 305. Fortescue is growing. Rio wants to grow WA. So, that 10% drop in price is probably going to be offset by volume increase. So right now, there's probably not a material impact to government take, but it really depends on where the price goes, and volume will cap out, and the market still believes that iron ore prices are going to drift down from 100 to 90 to 80. So, that probably tells you all you need to know, that the government take is probably on balance shrinking.
Okay, always good to talk to you, Glyn Lawcock. Thank you.
Thank you very much.